In 2024, we didn't really see nearly as many dental transactions. Why do you believe that happened?
Well, that's a bad question to ask for a podcast where we only have an hour. But I'll start with some of the predictive indicators.
All dentists know the common career paths, but how do you know which path is right for you, and are there other options out there?
On this podcast, we will be chatting with industry experts. We want to bring you the knowledge and resources you need to take your career to the next level and break down those industry secrets interview by interview.
We are here to ignite a revolution in the dental landscape
and help you, the dentist, build the career you have always wanted.
I'm Dr. Cassidy Reeder.
I'm Carter Frank.
And welcome to the Revolution Dentistry Podcast. Hi, everybody. I'm Dr. Cassidy Reeder here with my co-host Carter Frank. This is the Revolution Dentistry Podcast, where we help you with strategies to build lasting success for yourself and your family. Today, I am joined by Samantha Strain and Brendan Messenheimer, partners at HealthStream Ventures. HealthStream is a boutique dental-centric healthcare investment bank specializing in growth strategy in the dental market. The firm supports dentists, physicians, investors, group practices, and DSOs across the United States, playing a critical role in group practice formation, growth, and value creation for established groups, capital sourcing, outsourced M&A, and analytics for both doctor-led groups and PE-led DSOs. Established in 2016, the team at HealthStream Ventures has executed over 350 practice acquisitions, sourced more than $1 billion in capital, and developed over 30 dental platforms, each of which have successfully exited or transacted. The leadership team comprises former C-level executives from DSOs, seasoned investors, and experienced owners within the dental sector. While the firm is client-centric, many of HealthStream's successes have come largely due to implementing mutually transparent and integrity-based deal-making strategies that ensure optimal outcomes for all parties involved. The firm leverages keen understanding of organizational cultures, refines sector-wide best practices, incorporating proven methodologies, and agile adaptations to evolving market demands to consistently deliver successful client outcomes. By proactively identifying and hedging against common and historical operational, acquisition, and investment pitfalls in the DSO sector, HealthStream effectively mitigates many of the risks and challenges commonly faced and safeguard their client strategies. So, Sam Strain, affectionately known as Sam, throughout the industry, is a partner and serves as the firm's chief development officer. She leads the organization's efforts in managing strategic partnerships and specializes in M&A and DSO/MSO advisory. Some lesser-known highlights of her 20-plus years of experience within the dental space includes co-ownership of an emerging DSO and leading acquisitions for a 300-plus location DSO that successfully exited. Sam's expertise is in innovative deal-making, strategic growth, healthcare banking and finance, and capital raising is widely known and appreciated among her industry peers. Brendan is also one of the partners of the firm and serves as Chief Strategy Officer. As the managing partner, he supports the organization's growth vertical leadership teams who oversee corporate development, financial planning and analysis, as well as operational management and integrations. Collectively, he has over 20 years of healthcare and dental experience with a large emphasis of his career centered around finance and investment banking advisory. So, long story short, we have incredibly talented individuals joining us today. Thank you so much, Sam and Brendan, for joining us on the Revolution Dentistry Podcast.
I was going to say you did a phenomenal job getting through that intro. That was a lot of stuff. So I'd say that
yeah, that was a lot of stuff. I was like, man,
that alone will really get you up there as far as podcast hosts.
Got to do it justice for the amount of stuff and incredible stuff that you guys are doing out there. Thank you.
We love to make the industry better, and we feel like this is what this podcast represents.
Tell us a little bit about your background
and how you got introduced to the dental industry. And I'll let you guys fight over who answers that one first.
That's easy. That's a Sam
Well, I don't
starter
know. It's
for
like
sure.
ladies first, or we'll save the best for last. You know, my story is it's really kind of interesting how life kind of plays out for you. So I grew up with 7 dentists in my family. My sister
Wow.
became a dentist. She's the closest to my my internal family that I've got cousins and aunts and uncles, and so we grew up talking about dentistry around the dinner table. Um, I grew up, talking about it, and the plan was I was never going to be a dentist, and I knew that just because I didn't think I could look in someone's, mouth all day, but hats off. I'm so happy that I get to work in this industry because it's a very diverse
Hmm.
industry from a lot of different perspectives. And,
Yeah, my wife couldn't ever either. She's a PA,
yeah,
and she's like,
yeah,
"Hey, I'll wipe someone's butt all day, but I will not touch their mouth." And I'm like,
that, that's,
"Okay, suit yourself."
that's right. The bad breath
We all
thing,
have our
all the
strengths.
things. There you go. That's right. And, my grandfather actually was a dental tech in the Navy during Korea. And when he got out of Korea, he went to work for a company that you guys might know, SS White. And back in the day, they were
Oh,
more
there
than
you
just
go.
the great white dental burr that, they're known for now, but they actually, he and a team of other innovators came up with one of the first panoramic x-rays. So it was really a unique, story
Wow.
of of his. And, I guess long story longer here. I grew up in the business. I started working as a distribution rep, and then I went into healthcare banking and finance with the Bank of America Practice Solutions, and I did that for a number of years. And then I
Mm,
was recruited away by a private equity by the name of JLL that had an underperforming asset and
mm,
needed help growing that asset and dumping it. And so that's how I got involved in
mm,
the DSO space. And now that's about, I don't know, 12, 15 years I've been in DSO solely, or private,
mm.
private investments, private equity, investment banking. So it's been a unique sort of journey for me to piece together the pieces of my life and the people that, I've grown up talking about dentistry to where dentistry is today, right? It's
Mhm, mhm.
changed a lot, and we still have a lot more change to look forward to. So
Wow.
that's me,
I mean,
and now we'll save the best
incredible.
for last.
No,
Well, thank
I
you.
think,
But
well, most of the people that are gonna be watching this podcast either know you or know of you, Sam. So I think that
I said I've been here a
your
long
experience
time.
speaks for itself. That's right. So uh, I've got to follow that up. So Brendan Messenheimer, it's kind of interesting. I had an interesting road to dental. I actually had started a medical equipment distribution company. Gosh, back in 2004, 2005.
Mm.
We largely focused in imaging diagnostic. We kind of cut our teeth, pardon that term, on medical and aesthetic surgical lasers, um, and really grew the business. It went from zero to fast, real quick. We were in the right place, right
Mhm.
time. Had some really great strategic relationships that fueled our growth. And I can't take a lot of the I can't take a lot of the credit for that just because of the teams that helped us get to where we did. Um,
Mhm.
that business, grew and evolved, and everything was wonderful right until about a year after the banks failed back 2007, 2008. We
Mm.
learned really quickly what it was like to have notes called for tens of millions of dollars and all
Oh,
kinds of things,
man.
and
Yeah,
learned how to fail.
Jeez.
That
Jeez.
I bring that up only because that was a really critical moment for me. And as far as my professional development goes, prior to my business career, I was actually in the Marine Corps. Coming out
Okay.
of the Marine Corps, you're esteemed and kind of shaped to
Yeah, thanks for
understand
your service.
it was an absolute honor. The people that I worked with in the Marine Corps, then and that preceded me, it was absolutely just an awesome experience. Wasn't the easiest of things, but hey, it prepped me, combat veteran, mentality. It kind of prepares you for
Hmm.
the dental world, guys.
Business
So,
ownership.
you
I'd love to hear it.
you
Yeah.
know, I can tie the parallels a lot. A lot of things don't make sense. People pop out of nowhere with bad ideas and do things, and you're wondering what's going on. There's a whole
I
concept
love the
here I could tie
connection.
together for us here, and I will
I
sort
love
of
it.
as we go along. But uh, started that business and really had a great experience. Across pitfalls. So that led me into dental. We had a really strong relationship with Henry Schein in our
Mm,
distribution business. After exiting the distribution business rather forcibly, I began
hmm
working within the dental space, and portfolio companies of Henry Schein. I joined. Had some really great experiences there, but was really introduced to the differentiation between healthcare and dental. So
mm.
I had to really
Okay.
rearrange my
Mhm.
mindset, realign kind of what drives the dental business. Was really, kind of surprised at the amount of focus and attention that, not so much found its way into clinical, development and technology, and let's go back to before we had our DSOs, we had corporate dental. You remember that
Hmm.
corporate dental,
Yeah.
kind of the scary thing that was really bad, and it had earned that moniker. But
Yeah.
really found that there's a lot of focus around M&A, and having dealt with
Hmm.
M&A and investment banking with my previous experience, really started putting a lot of time and effort into understanding the M&A component. So
Hmm.
I'll spin us fast here. We started HealthStream 2016. The
Hmm.
idea there was to maybe build a fund that would help provide capital for dentists seeking to grow their businesses.
That's awesome.
Yeah, and on a secondary was to create an M&A firm. We did. I'm sorry, at the time we were calling it Practice Transitions. HealthStream
Mhm.
started out as a doctor-to-doctor sell-side business, which
Wow.
fast forwards us to today, to where we are. We've shed the sell-side business back, gosh, maybe 4 or 5 years ago. Could have been, it was definitely before COVID. We turned our emphasis now onto we started big, so we started supporting multi-billion-dollar DSOs and the funds
Hmm.
behind them from a transaction advisory services, meaning buy-side advisory perspective.
Hmm.
We saw
Hmm.
a lot of mistakes being made, and no, really, in some cases, no offense to the organizations and the funds that were pumping investments into the DSO space, but we really noticed
Hmm.
that there was a lack of diligence being done on
Mm.
some of the financial componentry. A lot of stuff was being caught in Q of E with reputable
Mm.
firms. There were a lot of firms that were doing Q of E's that weren't so reputable, and a lot of things that were really easy to see got missed. But all that being
Hmm.
said, we really noticed there were some key pillars within the diligence component that weren't really being caught. So, strategic
Hmm.
advisory, around finance, the numbers, the spreadsheets, certainly. Deep diligence there was very important, but we recognized that there was a gap in the culture analysis.
Mm.
So not just the culture within the practice that you're seeking to acquire as a buyer,
Hmm.
but the culture within your organization as the buyer. How are these two
Right.
organizations going to mix? What's going to happen to Deborah at the front desk when we take over? Or when Dr. Smith gets her check, her wire at the end of the
Yeah.
closing, what's going to happen to the practice? And who cares about it beyond us? So we noticed there were a lot of
Hmm.
things, operational, integration based componentry. And we,
Hmm.
coming out of COVID, I guess around 2021, we really redefined ourselves as a true investment bank, providing
Mm.
advisory across, like I mentioned, FP&A, the very, very important spreadsheets, the numbers, the data sets,
Hmm.
and then
Hmm.
it built our business around operational and integration,
Hmm.
diligence and advisory, and capital sourcing. So that's me plus us, I guess. So there you go.
Hey,
No, that was
I
really
mean,
good.
you
You
saved
see,
us
I
time. You
identify as
saved
the
us time.
business.
No, no, I mean, that's what happens when you pour your life into it, right? And it's your heart and
Absolutely
Yeah,
soul.
right.
feels
It's
like
so
that.
And
great.
this is our heart
Eh,
and soul, and now that we're seeing some of the predictions we had sort of kind of come to light, where it's
mhm,
now the era of the doctor led, doctor owned groups. I think that now some
Right.
of our insights are really becoming, they're being valuable to able to help these groups, right? Which is really why we're here,
Which
to
is
help
what
them
we
make the right
definitely want to get
decisions.
into. For
Yeah.
Yeah.
sure. I mean, I'm
Sam
really
skipping ahead.
excited. No, no,
Oh yeah,
no, no,
sorry
no.
about that. Yeah.
That's no,
I get
that's exactly
excited.
the topic. Exactly. And we're all excited, and it's awesome that you have the experience where predictions you're making are coming true. And that is an indication that you guys are in the right place and providing the right amount of value to the right people. So like, in 2024, we didn't really see nearly as many dental transactions occur as we thought, right? And so like, why do you believe that happened, and what does that mean for 2025?
Well, that's a bad question to ask for a podcast where we only have an hour. But I'll start with, some of the predictive indicators. So, I glossed over the spreadsheets and I talked a little lightly around some of the minutia that are critical to, deal valuations and execution within, the space within an M&A component. So keeping it solely within the M&A space, it was pretty predictable. So leading up to 2022, we had
Hmm.
noticed, and we're not economists, but we know a few, and it feels like we paid enough of them to really take note
True.
of the capital market scene. So a lot of things were happening in the DSO space. There was a lot of growth. As we all know, there was a really massive boom coming out of 21, or coming out of
Hmm.
COVID, really beginning in 21 with unseen numbers from a deal making perspective within the M&A space. That continued well into 2022. But
Hmm.
the thing that was really interesting to us is as we were watching and participating, quite frankly, heavily on the front lines within this M&A boom. We looked at factors within the capital markets. We noticed that, in understanding the transactions that were taking place, we felt and saw that there were some, loose underpinnings to the infrastructure of how these transactions were being done.
Okay.
Everybody knows at this point in time, we can easily point to, what's called overvaluation. So paying up for the types of for
Which we
practices
saw
that
a
were
lot
certainly,
of.
we saw a
Yeah.
ton of those that, we saw quite a bit of those. And everybody, at every dental conference that you find yourself at, in back rooms or having cocktails or whatever you were doing there, there was always these, whispers of, hey, I, just heard Dr. Smith sold her practice for 12x, and that's $1 million top line practice, which is great. That's wonderful. Nothing wrong with Dr. Smith achieving that.
Good
But
for
at
her.
12x being paid,
Yeah.
I don't think Dr. Smith is gonna, really go back and look at articles in The Economist and then study, transcendent trends within PE investments in the past to say, no, this 12x is probably a bad thing for me to accept. I'm not going to do it. She
Oh
wisely
yeah, yeah,
accepted
yeah.
that. Yeah, she accepted that wire and moved on. So there were a number of things that were happening in the space that really put us into, gave us a point of view or built our point of view to recognize that there was something coming. And so getting past what we all saw coming or what ended up happening, which was, a really interesting monetary policy that we adopted, interest rates really, increasing what we call cheap or free capital, if there's such a thing, drying up or really being frozen. It caused a massive fallout within the space. All right. So that's what we saw in
Hmm.
2023 and into 2024. And the hope was, per your question, I'll finally get us back to there. But the hope was, hey, listen, we're coming out of that environment. Yes, certain, there was a lot of fallout that's not been really publicized in the dental space. We hear a lot of rumors.
Hmm.
We keep those rumors to ourselves and don't, participate in rumor patrol. But there were
Sure.
rumblings, right? They may not have been accurate, but there were a lot of rumblings, just like those 12Xs for the single practice with $1 million in top line revenue. Those types of
Hmm.
whispers. There were other whispers of a lot of groups and a lot of investors in the space being challenged to be able to unlock growth and to continue to buy and acquire. So all of this long
Do you
story gets us
think?
to,
Oh, sorry.
yeah.
I was just gonna ask, like, do you think that it was like the mentality is almost like a land grab mentality. It was like we got this boom going on, and we got all these practices that we need to acquire. We've got money that private equity is wanting us to deploy. We got to
Right.
just grab as much as we can, and there's a lot of competition right now for grabbing the good ones. So let's offer way more than we should, and that's like over leveraged a lot of DSOs, and I mean a lot have kind of gone under, if I'm understanding,
You
Right.
are.
because of a lot of these issues. But sorry,
You
continue.
are. Well, I'll just
Well,
say
look.
from my perspective, working as a buyer my entire life, pretty much on the buy side, that the buyers have become a lot more, astute in what they're looking for and how they're looking for it. And I think that teams now are talking to each other, whereas before you wouldn't have the M&A team really talking to the operations team or the people team, and so there
Mm-hmm.
was a disjointed process in place with even how to integrate these practices at
Mm-hmm.
scale. And so there was a lot of fallout from that. And Brendan, I'll turn it back over to you, but I just wanted to mention that I don't think that we've seen the end to all this yet. There's still more to be played out, but I think we're
Mm-hmm.
definitely, as an industry, and every organization that's out there is doing better and making marked improvements on their diligence process on these deals
Okay.
moving
They're gonna
forward.
have to.
Well,
That's
and that's a
right.
big
That's right.
push. Okay. So that, when we talk about the things that have happened and that people don't quite have a full grasp on, from what we've seen, having studied the market and being really close to what's happening in the space. The optimism was that in 2024 the deal making would improve, and then we saw interest rates reduced. Fed made some nice cuts along the way, even though there wasn't clarity as to how many cuts would be happening, things of that nature. Again, general optimism improved, and so we got a false sense of hope that, hey, because of the interest rates only trending back downward, that things were gonna, the acquisition activity would improve. But that
Mm-hmm.
thesis doesn't price in what Sam just mentioned, and that is that there was a lot
Mm-hmm.
of diligence that was omitted, whether it be,
Yeah.
to your point, but because of, gosh, we have to get out here and do an overnight land grab. I have to
Mm-hmm.
compete against the next group to make acquisitions, so
Mm-hmm.
maybe I should pay higher. There's a whole one, that's a whole podcast in and of itself we can have separately of this, so I'll leave that
Right.
topic. But there was this false sense of hope that because the interest rates were starting to trend back down, that would solve for the dry powder, or the capital deployment that was out there, but it didn't price
Mm,
in the component around, there was so much damage done by
mm,
groups not being able to grow. A lot of groups
it's
weren't
true.
growing organically, and as Sam mentioned, from a cultural perspective, integrations and things of that nature weren't being done effectively during the land grab. That
Mhm.
even though cost of capital might have retreated a tad, you still had these other massive issues that were not top of mind or top of topic, as it related to the challenges and of with regard to restarting M&A in the space. And so,
And I hate to, interrupt again. I just have a burning question. So like after all this that you just mentioned, would you say that private equity or a lot of private equity groups have been de-incentivized or discouraged because of the maybe having gotten burned in the past few years?
yes, and rightly so. So we see it on across two sectors. So we see PE that's been invested, and that's had the challenges that we've all discussed, and that people are talking about within the space over the past 2 years now. The other side
Mhm.
to that, though, so they have, they still have to, provide returns on investment to their investors.
Mhm.
The strategy behind doing that is being able to unlock assets, meaning,
Mhm.
hey, we bought this group 5 years ago, we invested $50 million or $100 million. We're going to be able to transact on that business in three to
Mhm.
five years, recoup our investment, plus return on cash, return on the investment that was made by our shareholders, and
Mhm.
distribute. Well, those transactions that they had invested in have those fundamental issues, several fundamental issues that we've just alluded to. and there is
Mm-hmm.
no unlocking. So you've got your PE firms that have learned the hard way, we'll call it, or folks that are invested that can't quite transact for a number of reasons, some of which
Mm-hmm.
we've just mentioned. But then we also have PE that was sitting on the sidelines, family offices and other kind of
Mhm.
hybrid PE funds
Mm-hmm.
that did
Mm-hmm.
not jump into the space because they felt like,
Mm-hmm.
I'll go back to our lucky Dr. Smith who broke the DSO world with her $1 million, very impressive $1 million top line practice, who got the 12x. And, again, because she's not an economist, she took the money and ran and wrecked the whole DSO space. So those there were groups that were on the sidelines with capital that were much more patient and not as and were much more astute to
Disciplined.
valuations and things of that nature. They were much more
Yeah.
disciplined, and they're now entering the space. So it gives us this hope that we have additional new buyers coming to the table. But to wrap in
Thank
on what,
goodness.
yeah, well, and what they've done to both of your points, Cassie and Sam, when you mentioned, better diligence, more aggressive diligence. So instead of just looking into spreadsheets, that is still very important. Financials are very important, but they are digging into things like operational synergies, integration of whatever it is that they're buying, outside of their platform, and then what's it going to look like when we, do the integrations. The old days of saying we see synergies, hopefully we'll pick those up when we close. From a buyer's perspective, the buyers are now saying we need to see those synergies. We need to see that the organizations that we are buying are viable businesses that are not just propped up, thinned out so that their EBITDA can look higher, falsely, and then it
Mm-hmm.
has to
Mm-hmm.
normalize when we acquire it. There's a lot more
Mm-hmm.
going into, understanding, codes, buyer, or I'm sorry, reimbursement rates, fee
Yep.
schedule negotiations. There's RCM. There's just a lot of things that you would think
Mm-hmm.
would have been top of mind earlier, but because of the challenges that the industry has started to face from a growth perspective, the guys and gals that are coming into the space now are much more disciplined, and the diligence component is much more important to them on the front end. So we're very
Yeah.
supportive of that. We appreciate that. That's part of
Yeah.
what we
They've
do.
learned.
And
Exactly. That's
dentistry being
awesome.
I
very
love that.
nuanced, I think that we're finding that the knowledge base that we have collectively as a team, because we are all former C-levels, owners of DSOs, investors, and all these things, really
Mm-hmm.
becomes much more broader on significant different levels, right?
Mm-hmm.
Um,
Absolutely.
Yeah. Thanks for sharing those insights. Those were really great. Cassidy and I imagine our viewers are also curious about your take on the state of the dental industry, right? What could you tell us about the trends we're currently seeing in the DSO space and your perspective on the future of the DSO model?
Yeah, so I
Brendan,
think
I think
Sam was.
should answer that because you're pretty good at that one.
Yeah,
He's
and
a good
and sorry
storyteller,
about.
guys. I'm not gonna lie.
Hey, we could
Well,
tell. We could tell. He's been killing
yeah,
it.
I apologize for the verbosity here, but honestly, that is my role and responsibility within the firm, and the thesis of our firm is to really perform functionality, do the things that we do within the space, but to do so with data driven uh, objectives, right? And it just
Mm-hmm.
so happens that I'm the first filter that we have within the firm to collect the data, and we have a really excellent advisory board that is exceptionally well tenured, both in dental at the lower middle market level up to the enterprise level market. So we have access to a lot of information, and as a result, me being the first filter, sometimes I'm the delivery guy as it relates to that information. So the broader dental market it's faced today, or as it sits today, is a thriving business still. From a distribution component. So I'm going to stay on the business of dentistry. Let's not get quite into clinical, because there
Mm-hmm.
are some interesting things happening at the clinical level. Let's
Mm-hmm.
discuss the payer component. That's always been a fun discussion
Mm-hmm.
amongst us and clients and everyone else. So I'll omit that one too. That's two podcasts. So we'll do that one later.
Or three.
But with
Yeah.
regard to the business, yeah, exactly. With regard to the business of dentistry, there are things that are happening from a clinical perspective. There are technologies that are being introduced. There are the broader focus rather on revenue cycle management. It's always been there. There are some folks that are really ramping that capacity up. So if you have the ability to bill and collect sooner rather than later, your business is probably going to do better. So the evolutions within RCM, just by the sheer volume of startups and businesses that provide advisory, doesn't mean that they're all great or good. But
Hmm.
just the sheer number of focus around RCM is very uh, telling of that side of the business. AI, you got to talk about that. AI, generative AI, and all the
Hmm.
different types of AI that exist are entering the
Hmm.
space clinically, thankfully, and also at the business level. So the dentistry has some unique things happening within it that are greater than what we've seen in the past. So
Hmm.
we see that, and we see there are challenges within that, but even with all that baked in, dentistry is still the business of dentistry is still good. And for all of you new dentists and gosh, dentists who are more tenured that have tons and tons of school debt still, it's still good. We're still okay. We're still in the right place. The
Phew.
DSO landscape. Yeah, I
Yes,
was gonna say,
absolutely.
we have to get you a few more sponsors here to get rid of some of that,
It,
but some of that lingering debt.
yeah.
Um, but in all seriousness, as it relates to the DSO space, we have a different point of view on that. So we do believe that there are sectors of the DSO space that are definitely changing and for the better. And so, when we look at the big PE-backed DSOs that are really putting an emphasis now because they couldn't grow via M&A and other acquisition style methodologies. They've put a lot of efforts into. Sorry, English is bad for me, and it's my primary, almost only language. But
Most
the
only.
DSOs that are out there, have been focusing on same store organic growth. Those are things that probably should have been done anyway. So now that you have the
Hmm.
excuse to settle down and digest, there's been some interesting things happening there. On the other side of
Hmm.
this, we see, as Sam alluded to when we kicked off our podcast, and I won't get too deep into here. There's the doctor-led DSOs, the doctor-centric, more emerging DSOs. These are the
Yeah.
clients that we see a lot more
Yeah, that's
of
the
here
next
at HealthStream.
topic.
I
Yeah, so
know.
I'll
Perfect
hold.
timing.
Um, but between the doctor-led, doctor-centric emerging DSO models, between the groups that have been, they were what we considered very strong DSOs, but still haven't been able to really break the barrier of the last year and a half to 2 years of growth. Some of those guys and gals are going to start purchasing again. So the DSO space,
Mm.
we have new buyers that have come into the space, like we just mentioned, but they're going to be a lot more. They are. There is no going to be. I mean, it's demonstrable. The newer folks that have entered the space are much more discerning. The other component to this that we see is that um, as it relates to the DSO space, there is going to be a consolidate. We've been talking about consolidation of the consolidators for a long time. I think that the thesis
Yeah.
behind how that's going to happen has changed dramatically because, everyone thought that the DSO business would continue to grow, didn't kind of foresee a dip. Now that we're in that dip, we have and again, I don't want to be too doom and gloom here, but this is the reality. Um, a lot of the PE firms that we've talked about, or that we were kind of alluding to earlier in the podcast, that were sitting on the sidelines, can't do anything. We're hoping, to grow via M&A and couldn't exit their portfolio co's because of operational challenges. We're finding that some of those and an increasing number of those, especially that are under bank control. And there are a lot
Hmm.
more DSOs under bank control or lender control than the public is discussing, the dental public is talking about. There's a little bit more
Hmm.
rosier outlook there being
Mm.
publicized than reality. But we see that the
Hmm.
consolidation of the consolidators are going to it's going to stay at the premium level, which is the big folks are going to start buying some of the emerging folks, and that's a good thing. But we
Hmm.
see the big folks are going to have to start releasing assets so that capital can be recouped at whatever level of a loss it can be. And so there's
Mm-hmm.
chunks of existing DSO business or DSOs that are, and we're actually negotiating these right now. We're not going to get into any
Mm.
specifics on that, other than to say there are
Mm-hmm.
large DSOs, PE-backed DSOs that are under the pressure of their private equity firms, their investors, and their banks to recoup
Mm-hmm.
capital at any cost, and we're helping them divest some of those. And there are other firms
Wow.
that are doing that as well. So
Mhm.
this is happening very
Mm-hmm.
privately, as it should be.
Sure.
Dental is a very emotional business, specifically the business side of dental. There are some unique things happening behind the curtain that are taking those old slangs and sayings that we used to have, the consolidation of the consolidators happening. There is now the emerging folks are growing, and the investors that were sitting
Mm.
on the sideline are now able to grow quickly because they're buying, you know, assets that are typically fairly well performing, but are part of a DSO, a holdco, or a management co that is in distress. So that's an interesting twist on the
Interesting.
space that
It
that
is.
is starting to happen. So that's end of scene. I'll
No, hey, no, that was
This
phenomenal
is why I wanted
because
him to
it,
share. Yeah, he does
no,
a very
yeah,
good
he's
job of
so
this. Yeah.
knowledgeable. He's so knowledgeable when it comes to this. And it's so fascinating, to know what's going on at the top brass level, so that people down below can kind of understand, okay, what can we expect, or what can other DSOs expect, or what can groups expect. So, that leads us into the next topic. So it sounds like there's opportunity out there. It sounds like the opportunity is out there, and it's for emerging groups. It's for emerging organizations, right? And which is incredible. So that leads me to something I want to ask you, Sam. So
Yeah.
the rise of doctor-led, doctor-owned groups. It's appearing, right? And it's
Yeah.
and we want it to be a lasting trend. So, and I'm
Yeah.
biased, I'm a doctor. So what factors do you
Yeah.
believe are
Very much
driving
so.
this movement, and how is it reshaping the dental landscape?
Well, I think, doctors seek greater autonomy, than I think what is every DSO. Let me back up. Every DSO out there will say, there's autonomy. And I think to a certain point there is, right? But
Mhm.
they seek that. You seek that as a profession. You go to dental school not to work for somebody. Traditionally, dentists have always been on an island by themselves, and they're creators and they're business people, and they wear all these hats. But with the rise of the DSO or the doctor-led, doctor-owned group, there's better economics, right? And I think
Mhm.
that the autonomy and the better economics from an economics of scale, the alignment on long-term patient care is improved. And I think that this trend will continue to shape the landscape of the industry, just because there's increasing competition with private equity-backed DSOs, and that's creating new financing structures that are tailored to the physician-owned group. And I think that's why MB2 has been so successful.
Mhm.
They're allowing the doctors to continue to retain ownership with the sharing of scaled resources.
Mhm.
I don't know, Brendan, if you have
yeah.
anything to add on to that. I'm sure I missed a lot. Again, this could be a topic for 3 or 4,
This could be a
podcasts.
series. Could be a series,
Yeah,
yeah.
it could be a
Well,
series.
that those are great points, Sam, and you mentioned, DSOs, one in particular you named. We like those guys. Hey guys.
Yeah,
But
hey.
to
Hey
that point,
guys.
that's a good example of best practicing, right? That's one of the hallmarks that we, harp on for our poor clients that are listening. They hear it all the time. Now they have to hear it on a podcast. But the best practices are, hey,
Yeah.
look, there are things that are being done with, I don't know, let's call it a 700, location group that you can't refine and copy all of. But there are things as a 4 location group that you can do that mimic the same. The groups have identified, whether they've gone through an M&A process in the past or what have you, they've identified that, look, there are things being done well at the corporate level. And maybe we didn't know.
Mhm.
You know, it's one of those big shocks in life that dentists don't do an MBA and crash course in economy. You know, it's really wild. I don't know why that doesn't happen. You know, speaking of student debt, let's get you another 500 grand there and problematic,
Right.
you know,
Yeah.
bank
They have
loans.
to
But
learn it. They have to learn it on podcasts like this instead.
well,
Trial by fire.
and
Yeah.
they're like we said, there are best practices, right? So they see some of the
Mhm.
really good things that have happened within that the DSOs have been able to offer at the private equity level, and they've gone it alone and done
Mhm.
that. And you know, we advise on that specifically, but they've been
Mhm.
able to form those groups. And so when you have the ability to say, hey, listen, I don't want my clinical autonomy, you know, impeded on. I did go to school. I've got all
Mhm.
that dental school debt for that reason. You know,
Mhm.
that I want to
Right.
be able to, you know, deploy clinical care my way.
Mhm.
That's best for
Mhm.
my patients that I know and I see. And so
That's
that's
right.
really been a nice driver behind the physician led or doctor led, dentist led groups. And the amounts that they do, or what amounts to them having the control over their futures that they had hoped. And again,
Mhm.
being able to, it's not to say that being part of a 1,000 unit or a 50 unit or a 200 unit, 200 location DSO will impact that, because I can you know, immediately counter that with several groups that we know and
Mhm.
work with, or just know in the industry that do a heck of a job allowing for clinical
Mhm.
autonomy. And on top of that, they have
Yeah,
the
for sure.
resources to, you know, to lean in together where you can have
Mhm.
clinical discussions as a team at a
Mhm.
small group levels. And you kind of, the last analogy I'll use, or the only analogy I'll use here, is almost like a legal firm. So you can go to a legal firm
Mhm.
seeking corporate law. I'm going to form an LLC. All right, great. Well, hey,
Mhm.
I also want to raise capital. Well, if I go to a
Mhm.
big firm, usually there's some other specialist within, you know, at a building 500 miles away from where I'm at that can help do that. And then, oh, by the way, I want to,
Mhm.
you know, maybe it's time for me to, you know, start doing a trust because I have paid off those dental loans. I don't know how I'm going to end
Mhm.
that commentary soon. But you know, we're
Someone has
starting. I need to
PTSD.
start a trust. That's right. Well, no, we deal with clients
No,
every day that do, and you know, we help counter that.
exactly.
But you know,
No, not
you
you.
have, the
Yeah.
point being is within these firms, yeah, within where we see the doctor led groups is being able to lend. One of the big advantages, and they're taking advantage of this, is being able to lend, you know, direct support to each other. And they, you know, that can happen at the corporate level, and we see great groups out there of varying sizes doing it. But you can do it so much organically when you started, you know, 5 practices together. The four of us all started our DSO together, and we're all, you know,
Mhm.
dentists around the board. You know, and
Mhm.
we can call each other or Zoom each other and talk about, you know, an implant case that we had that, you know, we have concerns over, or
Uh,
talk about occlusion, or talk about
Mhm.
different things. So
Right.
long
the
running
Right.
answer to
communication
something.
becomes, but the, yeah, the communication becomes more, I think, precise within these
Mhm.
Mhm.
doctor-led, doctor-owned groups from,
Oh, absolutely.
talking about, referrals of specialty patients to just like, hey, how do we want to run our business?
Mhm.
And
Mhm.
I think there's a ton of benefits to doing it that way. It creates
Mhm.
a organization of excellence when you have like-minded, practice owners teaming up together to do something great, not just for
Absolutely.
themselves, but, like I mentioned, for long-term patient care. I think good things
Mhm.
happen. We still have to know that, this industry was built by dentists and it can be continue. And I firmly believe that it should be continued to be owned by dentists, but obviously get partners, to the table,
Mhm.
capital partners, people like us,
Right.
people like others that do what we do to help you be successful in the endeavors that you're embarking upon.
Right.
Absolutely.
And I think, something that I would like to ask on behalf of other dentists out there, just before we wrap up here, is what are some, let's just call them like private equity strategies that like a dentist owned, dentist led group can employ to help them, kind of leave the middleman out, if you will, or do some of these things on their own to help themselves grow in that professional way that it's meant to be?
So
It's a
that is a core
great question.
competency of our business
Great
and
question.
focus. Yeah, as our partners, as we sat around our little Zoom tables over the past 3 years and talked about, the distinct advantages that smaller groups have, there are things that they can learn from. The best practices conversation that Sam started, that I
Right.
probably bulldozed into, but uh, professionalization, learning the importance of the professionalization of the business and the different sectors within the business,
Mm-hmm.
is a huge, that there's a huge value lesson there, that
Mm-hmm.
we all learned from the big guys and gals out there with PE backed, the PE backed groups. So, and then the industry has, the business side of dentistry has responded to that interest that the clinical folks that were just really worried about drilling and filling, and taking care of their patients. And again, like I said, haven't been through the MBA of business, business of dentistry, so to speak.
Mm-hmm.
What the takeaways, we now see as offerings in the market. You have groups like ours. There are several groups that provide advisory on professionalizing your business, insulating different
Mm-hmm.
components of your business that you didn't learn about in business school or dental school. And a lot of people
Right.
didn't learn about in business school either.
True.
We have the vendors. Think about the RCM vendors that I was referring to and the AI
Mm-hmm.
componentry that's playing both in business and clinical.
Mm-hmm.
The number of vendors that are now in the dental space that are focusing on the professionalization of various points within practice, whether you own one practice or 100,
Mm-hmm.
tells you that, while I'm not given the direct answer, it does shed light on the fact that,
Mm-hmm.
we, the clinicians, us that provide services to help professionalize the businesses, that
Mm-hmm.
those best practices have been recognized.
I was just going to add, just with some key considerations on, building a professional, what we like to call investment grade group or whatever you want to call it,
Investment grade
strong,
Mm-hmm.
practice. Call it what you like. Yeah.
strong operational infrastructure, strong operational infrastructure, cannot be overlooked, including all those centralized services, right? I think all of that
Mm-hmm.
is critical for long-term success. And, doing that too, just an example, one of the groups we're working with, they're implementing a centralized billing and procurement, right? And we
Mm-hmm.
saw that's a
Mm-hmm.
15% reduction, might even be more than that. The numbers aren't, I don't run our numbers every day. Okay, that's for Ron Kane and our business intelligence team. But, we're
Mm-hmm.
seeing a huge, significant reduction in overhead costs, right? So streamlining some
Right.
of these things that you can centralize and really dig in and get a handle on. It's just, super important,
I love it.
Yeah.
yeah.
Acquisitions are the same way. If you're looking to buy another practice or someone's retiring in your area and you're going to roll them into your practice, to increase, you have capacity, you can roll in additional patients or staff, et cetera. The diligence piece, back in the day when, I would sit with owners that would be looking to acquire people and they'd write things down on paper, pass it across the desk, and someone would say yes or no. And there was not a
Yeah.
lot of
I got a
great
job offer
diligence
like that one
done.
time.
Yeah, that's right.
I did.
The old school way. That was great.
Yep,
But
I
that
love
those
was.
it.
those types of things,
Uh-huh.
those types of things were learned as well. So hey, listen, let's do provide more diligence. Let's definitely
Right.
look at these practices more. If I'm looking to sell, there's just a number of things that, we've seen that have been really interesting. We'll call them best practices, from, the big guys and gals, the single practitioners and the smaller group owners
Right.
have certainly leveraged.
All right. And
Thanks, guys.
before actually we let you guys go, if there's any place that someone can go to get in contact with you or look up a place where or go to a website where they could, inquire about certain services that you would, be able to provide, how would they be able to do that?
Well, we've recently reduced our domain size, our domain name. So you could
We
find us
did.
at health. We did. We were healthstream.ventures. So you
Okay.
could go to the web, find us there, or a lot easier to spell, hsvllc.com.
Hmm.
So we exist there. You'll have access to our the contact page. You can find us on LinkedIn, both corporately and individually. Brendan Messenheimer's a little harder to spell, so Sam Strain a little bit easier to search for on LinkedIn. And our team
True.
monitors all social channels that we exist on. So contact us at any of those places, and a member of our team will respond right away.
Absolutely. You guys have been absolutely incredible. You guys have been
Oh,
absolutely incredible. Thank you
well, thank
so
you for
much
having us.
for joining us today. Go ahead and take us away, Carter. We really appreciate your time.
Awesome. Well,
Absolutely.
thank you everyone for tuning in to the Revolution Dentistry podcast. If you're finding value here, make sure to hit subscribe so you never miss an episode. We're here every week to help you grow, and we'll see you next time.